Hello and welcome to Crack CA Exams with us, a vertical of Unacademy, India's largest online learning platform that provides you help in your preparation for the CA Foundation, CA Intermediate, and the CA Final Examination. In the Crack CA Exams with us vertical of Unacademy, the aim is to provide you top educators, quality content, and overall a great learning experience. So come, let's crack CA exams with us, Unacademy, India's largest online learning platform. I welcome you to the session today. Before we proceed, a little about the educator today. Hello, I'm Prathik Gupta. I'm a Bachelor of Commerce from Christ College, Bangalore University. I'm an associate member of the Institute of Chartered Accountants of India, an associate member of the Institute of Cost Accountants of India, and also an associate member of the Institute of Company Secretaries of India. I'm also a law graduate from Karnataka State Law University and currently a practicing chartered accountant, and I'm also a visiting faculty for CA subjects and an educator for CA students both offline and online. Prior to starting my own, I worked with SR Bartley Boy and Associates, that is the Indian member firm of Ernst & Young Global, in the audit and assurance department, and then I worked with EY India, that is Ernst & Young India, in the mergers and acquisitions department. Post that, I also worked with the Manipal Group in Bangalore and was the corporate controller of the Indian and the German entity located in Frankfurt, Germany. And it's only when I got back from there that I decided to start my own. And here I am today, having this opportunity to take this session for you fine, young and enthusiastic CA aspirants. So thank you and welcome to my session, and I hope you find it useful. At any time during the session, in case you have any questions, any observations, any discussions to make, please feel free to do so, and please do drop in a message and on the YouTube thing itself, and I will be happy to help you. All right, let's proceed. Now, Unacademy, just one second. Now, Unacademy is present on 3 platforms. The first is YouTube. Then there are special classes. And then there is the Plus platform, which I will tell you in a while. Now, YouTube is what you see right now. You are viewing my session on YouTube, which is an absolutely free of cost session, and it is just mainly the purpose of the whole YouTube session is to help you in your preparation and also let you know how Unacademy can help you in your preparation for the CA Foundation and Intermediate examination. The second how Unacademy reaches you is special classes. Now, special classes are also important topics or sessions taken on various important topics that will help you in your preparation for the CA Foundation and Intermediate exam. Now, where do you find the special classes? The special classes are found on the Unacademy Learning app, which you need to download from your Play Store, which I shall be telling you a couple of slides later. And now the most important platform of Unacademy, which is the Plus platform. Now the Plus platform of Unacademy is the payment-based subscription model, which provides you various packages, subscription packages for the various examinations. And similarly, for the CA Foundation and the Intermediate examination, also there are subscription packages, which we shall talk about a couple of slides later. Now, if you enroll for the Plus platform of Unacademy, what do you get? Firstly, you get daily live classes where you get to chat with your educator, engage in discussions, ask your doubts and answer polls, all while the class is going on. Yes, you heard it right. It's all while the class is going on a real-time basis. You do not need to wait for another session. You do not need to wait for the end of the session. You do not need to wait for an appointment with the lecturer. It's like a live class. You can just raise your hand and the educator will be happy to answer your questions. The second important reason why you should enroll for the Plus platform of Unacademy is the Plus platform of Unacademy conducts various live tests and quizzes at regular intervals, which helps you evaluate your preparation for the examination, and also conducts various mock tests and quizzes to get a detailed analysis of your performance. Now, what do you mean by the detailed analysis of your performance? Now, through these mock tests and quizzes and live tests, it enables you to identify your weakness, your not so strong areas, and then your strong areas. All right, so now what happens if this is done? Now if this is done, you can spend adequate time on these areas. You can spend a lot of time on your weak areas, you can spend a little lesser time on your not so strong areas, and then you can spend a lot more less time on your strong areas. So this evaluation and regular mock tests and quizzes help you in identifying these areas, so that you can divide your time, distribute and channelize your time accordingly. The third reason why the Plus platform is advised and encouraged to you is because of the structured courses. Now the courses included in the Plus platform of Unacademy are structured. They are called structured because they are in line with the exam syllabus. So once you finish a Plus course, you can rest assured that you've completed the syllabus of your examination without missing out on any important or major point. And the lastly and most importantly, one subscription. Just one second. Just one second. I think there is some issue here. Okay, yes. And lastly and most importantly, one subscription. Just one sec. One subscription to the Plus platform of Unacademy gives you access to all the live and recorded courses to watch from the comfort of your devices. That means you can watch it from your mobile phone, your tablet, your laptop or your desktop, and wherever you want and whenever you want. You do not need to be glued to your house. You do not need to be in front of your system. You can access the information whenever you want and wherever you want. So that is the most important feature of the Plus platform of Unacademy, and this way it will be most advantageous and beneficial in your preparation for the CA Foundation and Intermediate course. So I really look forward to seeing all of you on the Plus platform as soon as possible, and take advantage of the various benefits that the Plus platform has to offer to you. Okay, now like I told you, the three platforms, how the Unacademy platform helps you out. Just one second, just hold. Okay, okay, now like I told you, there are special classes and the Plus platform on Unacademy. Now the special classes and the Plus platform can be accessed on the Unacademy Learning app. Now how do you get the Unacademy Learning app? You need to go to your Play Store in your mobile phone and download the Unacademy Learning app from there, and put in your mobile number. To your mobile number there will be an OTP sent, and using that OTP you can register on the Unacademy Learning app. It's as simple as that. It's not very complicated, and once you register and start using the Unacademy Learning app, you get access to all the special classes and all the Plus courses that Unacademy platform has to offer to you. Of course, Plus is a payment made subscription model. So all right, so yeah, just give so that way. Okay, so you need, so for those of you who have downloaded the Unacademy Learning app, I thank you very much, and I request your continued support in the future as well. And for those of you who have not downloaded the Unacademy Learning app yet, I request you to go to your Play Store, download the Unacademy Learning app, and register on it as soon as possible using the OTP sent to your mobile number. Okay, now like I told you, the Plus platform of Unacademy is a payment-based subscription model. The various packages for the CA Foundation and Intermediate subscription provided by the Plus platform of Unacademy are as follows. The packages are for 1 month, 3 months, 6 months, 12 months and 24 months. The 1 month package normally costs you rupees 3,500. The 3 month package costs you rupees 8,750. The 6 month package costs you rupees 14,000. The 12 month package costs you rupees 17,500, and the 24 months package costs you rupees 21,000. Now while you make a choice of the package you want, please do not forget to use the code Prathik, that is PRATHIK, to get a discount of 10% on the above listed price. I repeat, PRATHIK, to get a discount of 10% on the above listed price. Now the immediate after discount price of the packages are as follows. The 1 month package will then cost you rupees 3,150. Okay, the 3150, the 3 months package will cost you rupees 7875. The 6 month package will cost you rupees 12,600. The 12 months package will cost you rupees 15,750, and the 24 months package will cost you rupees 18,900. So you see immediately you get a discount of 10% after using my code, which is Prathik, Prathik. Okay, now I would personally recommend to you to go for the 12 months package, at least for the following reasons. Firstly, it is very cost effective. If you see the per month cost in the 1 month package and the per month cost in the 12 months and the 24 months package, you will see that it's almost less than 1/3 of the 1 month package cost. So there it gives you a lot of savings immediately. And secondly, because the CA Foundation and the Intermediate package is being provided to you in one subscription, it makes more sense for you to go for the 12 months package, because it normally takes about 12 months time for you to prepare and clear your CA Foundation and Intermediate examination. So it makes sense if you go for the 12 months, because it is cost effective and it also gives you the package for the entire duration. All right, so having said this, so when you make a choice of the package, please do not forget to use the code Pratik to get a discount of 10% on the listed price. Please take about a minute, go through this slide carefully, and then we proceed. Okay, now like I told you that the special classes are important and very detailed sessions taken on various topics that will help you in your preparation for the CA Foundation and Intermediate examination. The special classes are conducted on the Unacademy Learning app, which I told you a little while earlier, where you need to go to your Play Store and download the Unacademy Learning app, register on it using your mobile number and OTP, and then you get access to all the special classes and the plus courses of Unacademy that help you in your preparation, that enhance and accelerate your preparation for the CA Foundation and Intermediate examinations. Okay, so here are a few of the many special classes that I have conducted on the Unacademy Learning app for you to take benefits from. I have taken special class on revision test papers, May 2019 business laws, issued by the Institute of Chartered Accountants of India. I have taken session on the Sale of Goods Act 1930. I have taken special classes on Indian Contracts Act 1872. Then I have also taken special classes on the Companies Act 2013. Now over here you will see part 1, part 2, part 1, part 3. It simply means there are various sessions that have been taken on these topics to cover the entire topic comprehensively. So there are a lot of special classes of mine on the Unacademy Learning app, where you just need to register there, type in Prathik Gupta, Prathik, and you get access to all my special classes and plus courses that I have to offer to you. Okay, so I request you to make use of it and give me a feedback and ask me any questions you have. All right, now also here are a few of the links, direct links to the Unacademy Learning app for the various sessions or special classes that I have taken. You can click on these links, or you can copy and paste these links in your browser to directly take you to the special class of your choice. I have taken special class on the Indian Contracts Act 1872, special class on the Sale of Goods Act 1930, special class on the Indian Partnership Act 1932, the special class on the Limited Liability Partnership Act 2008, special class on the Companies Act 2013, special class on Basics of Communication, special class on Accounting Concepts, and also special class on various revision test papers issued by the Institute of Chartered Accountants of India, which were used for discussion and educational purposes only. So take a look, have a glance at these sessions, and please either copy paste or click on the links to directly take you to the Unacademy Learning app containing these special classes. Okay, so I request all of you to go through the special classes, because those will benefit you in your preparation for the CA final and CA Foundation and Intermediate examinations. Okay, now we come to today's topic. Now the topic that we're going to discuss today is provisions for filing return of income and self-assessment. Okay, now this topic basically comes under Income Tax Act 1961, and it just helps you to know who are the people who are supposed to file their income tax returns, what are their due dates, what happens if you do not file your income tax returns on time, and what happens if you delay or you miss the deadline for your income tax returns, and then how once you file the returns, what happens, what does the department do, the processing at the department's end, that is called assessment, scrutiny, and then the result and outcome of all that. And in case anyone wants to evade income taxes in India, what happens to all of them? What is the meaning of self-assessment and return of income? So it will just help you in understanding the income tax law in India. So if you're ready, let's proceed with this. Okay, now let's talk about the return of income. The Income Tax Act 1961 contains provisions for filing of return of income. The return of income is the format in which the assessee furnishes information as to his total income and tax payable. The format for filing of returns by different assessees is notified by CBDT. CBDT simply means Central Board of Direct Taxes. I'll just mention it here. Okay, this is a body under the income tax regulation. The particulars of income earned under different heads: gross total income, deductions from gross total income, and tax payable by the assessee are generally required to be furnished in a return of income. In short, a return of income is the declaration of income by the assessee in the prescribed format. Okay, we will discuss about that format in a while. Now, this whole session is just to familiarize you with who is supposed to file the income tax return, how the income tax return should be prepared, what are the constituents of an income tax return, and in short, a return of income is a declaration of income by the assessee in the prescribed format. So there is a format that is provided by the department, and you need to furnish your information about the your income in that prescribed format. So let's go line by line and read this. The Income Tax Act 1961 contains provisions for filing of Income Tax Act, filing of return of income. So it means the provisions relating to your return of income is contained in the Income Tax Act 1961. Income Tax Act 1961 is the law containing all the provisions relating to income tax in India. Return of income is the format in which the assessee furnishes information as to his total income and income tax payable. So it means the department has certain fixed format, which we will discuss further, in which the assessee is any person who is expected to pay any sum under the Income Tax Act 1961. So the return of income is a format in which the assessee has to fill in all the details of his various income under the various heads of income and calculate his total taxes and pay that taxes. Okay, the format of filing returns by different assessees is notified by CBDT. So every year, the Central Board of Direct Taxes notifies the format and the returns for the various assessees. Okay, so a person might just have salary income. So for him, the return form is different. A person might have salary income and house property income. For him, the income tax form will be different. Similarly, a person might have capital gains, or a person might have income from business and profession and other sources. In so, then the format changes. The format of the return changes, which we will discuss further. This is the introduction page. The particulars of income earned under the different heads. So what are the 5 heads of income? We have income from salaries, okay, for the benefit of the viewers today, let me explain this. Now, there are 5 heads of income. contained in the Income Tax Act 1961. The first head of income is salaries, in which all salaried employees or people who earn salary, who have an employer-employee relationship, they put their details in the salary section. Then if people have any house property from which they are earning rental income, or if they have any property which they have bought for themselves, that details and income has to be entered into the house property section. In case any SSE has bought and sold any capital asset, that means a house, land or shares or debentures, in that case if he gets profits, that is called capital gains. So in case those capital gains are there, then those details will be entered under the section capital gains. Then if the assessee is carrying on any business or profession, so for example, if the assessee is carrying on the business of trading in furniture, then he will put under the fourth section, that is business profession. And a person like me, who's a professional, chartered accountant, so a person carrying on any profession like a CA, lawyer, doctor, architect, and etc., will put in his income details under the portion of profession. And if you have any income other than the first four heads of income, that is salaries, house property, capital gains, business profession, then you put the residual incomes under income from other sources. And basically your income from other sources example is what interest you earn on the savings bank account or interest on your bank FDs. All these come under other sources. So basically when you file your return of income, you need to declare your income under all these five heads. Then, so we've reached till here. Earned under different heads. Gross total income. So the total of all these five is known as the gross total income. Then there are various deductions which are allowed under the Income Tax Act from the gross total income. So those deductions are made from the gross total income, and then you arrive at the total income, total taxable income. So on that total taxable income, the income tax is calculated based on various slabs, and then there is a tax payable by the assessee and generally required to be furnished in the return of income. So you have to give all the income details under the five heads of income. The total of that is your gross income. From the gross total income, you deduct, you make deductions under chapter 6A. Okay, that is chapter 80. Okay, and then you get your total taxable income. On your taxable income, you compute the tax, and that tax you have to pay to the government. And in case if you have paid extra tax, then you can also claim a refund from the government. So in short, a return of income is the declaration of income by the assessee in the prescribed format. So in a particular previous year is 1st April 2019 to 31st March 2020 and so on. So whatever income is earned during a respective previous year is declared by the assessee to the income tax authorities in a prescribed format, and that is known as a return of income. Please take about a minute, go through this, and then we proceed. This is an important thing. This is the introduction, but it's important. Let me know if you have any questions. Okay, now we come to the second important part, compulsory filing of return of income. Now we see who are the people who are compulsorily required to file return of income under the Income Tax Act 1961 in India. Okay, as per section 139(1), it is compulsory for companies and firms to file return of income or loss for every previous year on or before the due date in the prescribed form. So please remember, first section, it is compulsory for companies. So companies means anything that ends with or it could also mean Section 8 companies. So companies are any entities, the name of which ends with private limited, or it also means Section 8 companies. To know more about companies, I request you to go through my special classes on the Companies Act 2013, which is present on the Unacademy learning app, because I've taken about 7 to 8 hours on the Companies Act 2013 to explain the provisions of the companies to you. So please go through that and know more about a company, about what a company means under the Companies Act 2013. Now, and firms. Now, what do firms mean? Firms means partnership firms. Okay, so as per section 139(1), it is compulsory for any companies and firms, partnership firms, to file a return of income or loss for every previous year on or before the due date in the prescribed form. So, for companies and firms, every previous year, for 1st April 2019 to 31st March 2020, the return has to be compulsorily filed, even if they do not earn an income or a profit. Even for the loss, they have to file it before the due date, and the due date and the prescribed form is given to you under the Income Tax Act 1961. Just give me a second, I'll just get some water for myself, and in the meantime just read this and I will explain it to you. Okay, I'm so sorry. I just went to get some water. Just 1 second. Just hold on. Okay, so let's continue with this. So the first case, so we discussed about the first case where every company is compulsorily required to file the returns along with firms. In the second case, in case of a person other than a company or a firm, filing of return of income on or before the due date is mandatory if his total income or the total income of any other person in respect of which he is assessable under the Act during the previous year exceeds the basic exemption limit. So currently the basic exemption limit is rupees 2,50,000. Okay, for a normal citizen. So that means who's not a senior citizen, not a super senior citizen. So other than companies and firms, if there is any assessee like an individual, a HUF, an association of person or a trust, and their income in the previous year exceeds the basic exemption limit, that is if it is more than rupees to 2,50,000, then in that case they need to file their returns before, on, or before the due date as per Income Tax Act, and the form will be intimated by the CBDT every year. So the forms for filing of income tax return keeps changing every year. Okay, so this is the second one. Now third one, every person being a resident other than not ordinary resident in India within the meaning of section 6(6) who is not required to furnish a return under section 139(1) would be required to file a return of income or loss for the previous year in the prescribed form and verified in the prescribed manner on or before the due date if at any such person during the previous year has. So if a person who is a resident of India and basically he's got an income less than the exemption limit of 2,50,000 for the current previous year, but still if he does the following transactions, he will mandatorily be required to file his returns of income. Now what are those transactions? Let's have a look. First one, if he holds as a beneficial owner or otherwise any asset, including any financial asset in India, any financial interest in any entity located outside India, or has a signing authority in any account located outside India. So if a person who is a resident in India but has any financial interest, or he holds any asset out of India, or has any signing authority in any bank account outside India, then he has to file his returns. Point number one. Point number two, he is the beneficiary of any asset outside India, including any financial. That means if he's got a house outside India from where he receives rent or he receives any income, then he's supposed to file his returns in India. However, an individual being a beneficiary of any asset, including any financial interest in an entity, financial interest will be a shareholder, or if any person has put in any money in a company, then he is said to have a financial interest. Located outside India would not be required to file returns of income under this clause, where income, if any, arising from such asset is includable in the income of the person referred to in A above in accordance with the provisions of the Act. So this simply means if the person who owns an asset abroad and also earns the income from that asset are the same people, then then they both have to file the return of income under the Income Tax Act 1961, even though their income in India is less than the basic exemption limit of 2,50,000, and ordinarily they are not supposed to file their returns. Then we look at the meaning of beneficial owner and beneficiary. In respect of an asset for the purpose of section 139, a beneficial owner means an individual who has provided directly or indirectly consideration for the asset for the immediate or future use, benefit, direct or indirect, by himself or another. So it means a beneficial owner means if a person owns a house abroad and from that house he gets the money or benefits from that, then he's supposed to be the beneficial owner. A beneficiary is any individual who derives benefit from the asset during the previous year and the consideration of such asset has been provided by any person other than such beneficiary. So simply, like the name says, a beneficiary means a person who obtains the benefit of something which he may or may not be the owner. Okay, so he's the beneficiary. So whether the person is the beneficial owner or is the beneficiary of a asset located abroad, where it could be a financial asset also, he has to file his returns of income under section 139(1) compulsorily, even though his income is less than rupees 2,50,000. Okay? Alright, take about a minute, go through this, and then we proceed. Please take about a minute and then we proceed. Okay, so then we look at, we've looked at compulsory filing of returns of income. Okay, so we've seen 1, 2, 3, 4. Now let's look at 5. Any person other than a company or a firm who is not required to furnish a return under section 139(1) is required to file income tax return in the prescribed form and manner on or before the due date if during the previous year such person. So if any other person, see, a company and firm mandatorily have to file the income tax return. If any person other than a company or firm but who does not have to file his returns under section 139(1), that means whose income is not more than the basic exemption limit, but if he carries on the following transactions, he is still supposed to file his income tax return on or before the due date during the previous year. Now such transactions are: if such person has deposited an amount or aggregate of amounts exceeding rupees 1 crore in one or more current accounts maintained with a banking company or a cooperative bank. So if that person in the previous year, 1st April 2019 to 31st March 2020, has deposited an amount exceeding rupees 1 crore in one or more current accounts, okay, then he has to file his income tax returns. B, has incurred expenditure of an amount or aggregate of amounts exceeding rupees 2 lakhs for himself or any other person for travel to a foreign country. So in case the person has incurred an amount of rupees 2 lakhs or more during the previous year, that is 1st April 2019 to 31st March 2020, for himself or any other person for traveling to a foreign country, in this case also he has to file his returns of income. Let's take the next situation. If the person has incurred expenditure of an amount or aggregate of amounts exceeding rupees 1 lakh towards consumption of electricity, okay, so if that person has paid electricity bills of rupees 1 lakh or more during the previous year, in such a case again the person is compulsorily required to file his IT returns. So what are the three things? So even though a person's income is below the basic exemption limit of 2,50,000, but he will still be required to file his returns of income if he has deposited an amount exceeding rupees 1 crore in one or more current accounts during the year, if he has paid rupees 2 lakhs or more for foreign travel for himself or any other person during the year, or if he has paid an electricity bill of rupees 1 lakh or more towards consumption of electricity during the previous year, and such other conditions as the department may notify from time to time. So this is a residual category, and in case the department puts on other conditions, then those conditions will also have to be fulfilled. Okay, so take a minute, go through this slide, and then we proceed. Take a minute, go through this, and then we proceed. Okay, any questions, please ask me. Okay, now then we look at the fifth point again. I'm sorry, this was the fourth point. So let's look at the fifth point. All such persons mentioned in 1 to 5 should, on or before the due date, furnish a return of his income or income of such other person during the previous year in the prescribed form and verified in the prescribed manner, and setting forth such other particulars as may be prescribed. Okay, so this is again the last part which says people in point 1 to 4, all these people should file their returns mandatorily on or before the due date issued by the CBDT in the prescribed manner and format that is issued by the CBDT every year. They should mandatorily file the returns. Now let's talk about due dates. Now this is an important thing because we need to remember the due dates. Now the due date means 30th September of the assessment year. Now firstly we need to be clear about what is previous year and assessment year. Now previous year is the year in which the income is earned, And assessment year is the year following the previous year in which you file your returns. So for example, if you earn a salary from 1st April 2019 to 31st March 2020 of 10,000 rupees a month, so that is 10,000 into 12, 1,20,000. That 1,20,000 you will file your returns in July 2020. So the assessment year for previous year 1920 is 2021. All right, so it's always the year after the previous year. So now due date means 30th September of the assessment year, where the assessee other than an assessee referred to in below is a company, a person other than a company whose accounts are to be audited under the Income Tax Act 1961 or any other law for the time being in force in India. Or C, a working partner of a firm whose accounts are required to be audited under the Income Tax Act 1961 or any other law for the time being in force. So all persons, okay, like a company, that is like I told you, with the ending with the name private limited, limited, or a section 8 company, or any other assessee other than a company whose accounts are to be required to be audited under the Income Tax Act 1961, okay, or any other law for this is also known as a tax audit under section 44. We will discuss about this as we go further, okay. Or if there is a firm, ABC Enterprises, it's a partnership firm, and that partnership firm has to get a tax audit done under the Companies Act a tax audit under the Income Tax Act 1961. And so if that firm ABC Enterprises has to get a tax audit done under Income Tax Act 1961, then its partners A, B and C can also file the returns by September 30th. They do not need to file the returns by July 31st. All right, so because they are working partners in the firm whose accounts are to be audited under the Income Tax Act. Okay, the first due date is 30th September. The next due date is 30th November of the assessment year in case of an assessee is required to furnish a report under section 92E. 92E is basically for transfer pricing and for international transactions. If a company or any assessee has incurred certain special transactions, then the due date for them is November 30th. We will discuss about section 92E as we move further. And the remaining and the most important deadline is July 31st of the assessment year in case of any other assessee. So for example, if it is a salaried employee or a person who's earning rental income or a person who's getting other sources of income, all these people have to file their returns by July 31st of the relevant assessment year. So for the financial year 1920, the return should have been filed by July 31st, 2020. But because this year we had a pandemic, Corona, that's why all the due dates were extended. They were extended to October 31st or November 30th, which is coming up. All right, so the three due dates are for company and for every company and every assessee undergoing a tax audit, the due date is 30th September. For assessees other than 30th September assessees, it's July 31st. And in case the company has foreign transactions, then a transfer pricing report has to be filed. Then it is November 30th. All right, please take about a minute, go through this slide, it's very important, and then we proceed. Hi Girish, hi Pratham, how are you? Nice to see you. Okay, take about a minute more, go through this. The deadlines are important, or due date. Any questions, please ask me. Let's proceed. Now let's look at an illustration. Okay, Paras, aged 55 years, is a resident of India. During the financial year 1920, interest of rupees 2,88,000 was credited to his non-resident external account. with SBI, rupees 30,000, and rupees 30,000 being the interest on the fixed deposit with SBI was credited to his savings bank account during the period. So Paras is a 55-year-old man. He is a resident Indian, and he received two interests, that is 2,88,000 and 30,000 into his bank accounts. He also earned rupees 3,000 as interest on his savings account, normal SB account. Is Paras required to file a return of income? What will be your answer if he has incurred rupees 3 lakhs as travel expenditure of self and spouse to US to stay with his married daughter for some time? Okay, now they've given us various situations. So the first situation, he has received an interest income of 2,88,000 and then 30,000 and then 3,000. So his total income is 2,88,000 plus 3,000, that's 2,91,000 plus 30, 3,21,000. Okay, and he's also okay, that is the second part of the question. So let's look at the solution. An individual is required to furnish a return of income under section 139(1) if his total income, before giving effect to the deductions under chapter 6A or exemptions under section 54 B, C, B, D, E, C or F, those are basically exemptions given from capital gains, okay, exceed the maximum amount not chargeable to tax. So for the assessment year 2021, that is the current assessment year, the limit is 2,50,000. So incomes up to 2,50,000 are exempt from tax. All right. So now we compute his income. All right. Now, firstly, interest earned on non-resident external account 288 is exempt under section 10(4)(2), assuming that Mr. Paras has been permitted by RBI to maintain the aforesaid account. Okay, so if the RBI has allowed him to maintain his non-resident external account, then in that case, whatever interest he has earned there is exempt from tax. Next, interest on fixed deposits with SBI, that will be taxable. Okay, so we see 30,000 is taxable. Interest on savings bank account is taxable, so we see 3,000 interest on savings account is taxable. So his gross total income is 33,000. Okay. Now there are deductions under section 80TTA, that is interest on savings account is allowed to be deducted up to rupees 10,000. Now for this you will have to go through the chapter on deductions under Income Tax Act 1961. So 80TTA allows you a deduction of 10,000 on savings bank interest earned during a previous year. So this 3,000 is allowed as deduction. Okay, so his total income, taxable income, is 30,000. Now 30,000 rupees is less than the basic exemption limit of hence he is not required to file his return of income for assessment year 2021. Okay, please take about 2 minutes, go through this, and then we proceed. This is the question and the first part of the solution. Go through this, take about a minute, and then we proceed. Okay, if you read this, now go through this, the first part of the solution. Take about a minute, go through this. Take about a minute more, go through this first part of the solution. In case you have any questions, please ask. Okay, so let's proceed. Now let's answer the second part of the question. Now we've answered this part of the question. Now if Paras required to file a return of income, no. Now what will be your answer if he's incurred rupees 3 lakhs as travel expenditure for self and spouse to US to stay with his married daughter for some time? In this case, yes, he has to file IT returns, because as per the IT Act 1961, if a person incurs any expenditure on foreign travel of more than rupees 2 lakhs, he is mandatorily required to file his returns of income, even though his income might be below the basic exemption limit. Alright, so in the second case, he needs to file his return of income. In the first case, he does not need to file his return of income. Alright. Now, the interest on interest for default in furnishing of return of income. Now, in case a person defaults to furnish the return of income in the due dates. Now, what were the due dates? The due date was 30th September for companies and SSCs who require to get their accounts audited under Income Tax Act or the tax audit under Income Tax Act 1961. Then you have all the other SSCs. It is July 31st. And in case the company has any foreign transactions or transfer pricing report, then in that case it is 30th November. So all the 3 due dates, if a person misses to file the returns by that time, what is the penalty? Okay, what is the interest? Let's look at it. Interest under section 234A is attracted for failure to file a return of income on or before the due date under section 139(1), that is 30th September or 31st July. For discussion purposes, whenever we talk about due dates, we will stick to 30th September and July 31st, even though 30th November is always also there. But for discussion, let's just stick to 30th September and 31st July. So under section 139(1), so if he fails to file his returns before 31st July or 30th September, as the case may be, interest is payable where the assessee furnishes his return of income after the due date or does not furnish the return of income. So if a person fails to file the return of income by 30th September or 31st July, as the case may be, or they file it after that in a delayed way, interest is payable by them. So what is the interest? The simple interest at 1% per month or part of the month is payable for the period commencing from the date immediately following the due date and ending on the following date. So if the due date was 31st July, the period of interest will start off from 1st of August and it will go on till the interest has to be till the following dates. The interest has to be calculated on the amount of tax. Okay, so following dates will simply mean till the date of filing IT return. So if the person files the returns on August 15th, the due date of which was 31st July, then the period to pay interest at the simple interest rate of 1% per month will start from 1st August and go on till 15th August. So for half a month, he'll have to pay 1% per month simple interest. Okay, or part of the month is payable. All right, so even if it is 1 day in the month, he'll have to pay interest for the whole month. Okay, then the interest has to be calculated on the amount of tax on the total income as determined under section 143(1) or on regular assessment as reduced by any advance tax or any tax deducted at source or collected at source, any relief allowed under section 89 and any tax credit allowed to be set off in accordance with 115 JD. So now the next question might be, on what amount does he have to calculate the interest? The interest has to be calculated Okay, so the interest that has to be calculated is on the amount of tax that he's calculated on his total income, and out of his total income, from the tax you deduct any TDS that has been made or any advance tax that he's paid or any tax credit is allowed to be set off. Whatever is the balance amount that he needs to pay, on that amount he needs to pay the simple interest at 1% for a month or part thereof. Okay, no interest under section 234A shall be charged on self-assessment tax paid by the assessee on or before the due date. So under section 234A, if an assessee files his return of income before the due date, then no interest under this section will be charged from him. Okay, please take a minute, go through this, and then we proceed. Okay, just go through this, take a minute more. Okay, any questions? Please ask me. Okay, let's proceed. Now, fee for default of furnishing return of income. If a person delays, there is an interest. But in case the person defaults in filing of income, then where a person who is required to furnish a return of income under section 139, that means by 30th September or 31st July, as the case may be, fails to do so within the prescribed time limit under 139(1), he shall pay by way of a fee a sum of rupees 5,000 if the return is furnished on or before 30th December of the assessment year, rupees 10,000 in any other case. So it means if the due date of filing the return was 30th September or 31st July, as the case may be, but the person does not file it on due date, there is an interest payable on the tax that he has to pay. Along with this, he also has to pay a penalty of rupees 5,000 if the return is furnished by 31st December. So 30th September, 31st July, he did not file, but the coming up 31st December, if he files it on or before that, then there is a penalty of fee or late fee of 5,000. If he files it after that, it is 10,000. However, if the total income of the person does not exceed rupees 5 lakhs, the fee payable shall not exceed rupees 1,000. So in case a person has a refund or his total income does not exceed rupees 5 lakhs, in that case, the fees payable shall not exceed rupees 1,000. Alright, so this is the late fee. Please go through this and then we proceed. Okay. Now, option to furnish return of income to employer. Okay, now there is also another option which is provided from 2-3 years where the employee has an option to furnish the return of income to the employer. This section gives an option to a person being an individual who is in receipt of income chargeable under the head salaries to furnish a return of his income for any previous year to his employer in accordance with such scheme as may be notified by the CBDT and subject to conditions as may be specified therein. Such employer shall furnish all returns of income received by him on or before the due date in such form, including a floppy, diskette, magnetic cartridge, CD-ROM, or any other computer readable media, and the manner as may be prescribed in the scheme. In such a case, the employee who has filed a return of income to his employer shall be deemed to be furnished a return. Okay, so now in this case, many times when there is a salaried employee, there is an option given that he can furnish his return to the employer, for the employer to file the returns of the employee in bulk. So in case an employee has done that and he's given his return of income to his employer, then it will be sufficient compliance, and it will be said to be that he has filed his returns on time under section 139(1) if he has furnished his return to the employer. All right, so this is one of the such schemes under the Income Tax Act 1961. Just go through this and then we proceed. Okay. Now, the return of loss. We've always been talking about profits and income, so let's talk about return of loss. This section requires that an assessee to file a return of loss in the same manner as in the case of return of income within the time allowed under section 139(1). So in case an assessee has a loss and he wants to carry forward that loss to be set off and adjusted in the subsequent period, in that case, the assessee has to file his returns of income on or before the due dates as mentioned under section 139(1), that is September 30th or July 31st, as the case may be, in case he wants to carry forward his loss and to be adjusted or set off in the remaining year. So it means if he does not file the return on time, the loss will not be allowed to be carried forward. Okay. Now, the section 80 requires mandatory for filing of return of loss under section 139(3) on or before the due date to carry forward the following losses, like I just told you. If he has any business loss, that means any loss under the head's business or profession, any loss from speculative business, that means dealing in shares or dealing in any other speculative business, loss from specified business, loss under the head capital gains, loss from the activity of owning and maintaining race horses. So in case from any of these activities, that is business, speculative business, specified business, capital gains, and owning and maintaining race horses, if he has any losses and he wants to carry forward that losses, then he has to file a return of loss within the due date under section 139(1), that is September 30th or July 31st, as the case may be. Consequently, section 139(3) requires filing of return of loss mandatorily within the time allowed under section 139(1) for claiming carry forward of the losses mentioned in 2 above. So all these losses will be on or before due date under section 139(1), that is September 30th or July 31st, as the case may be. Please take a couple of minutes, go through this, and then we proceed. Okay, please take about a minute more, go through this. Okay. However, under However, the loss under the head income from house property under section 71B and unabsorbed depreciation under section 32 can be carried forward for set off even though the return of loss has not been filed before the due date. So there is an exception. If you have any income or any loss from house property, or if you have any unabsorbed depreciation under section 32 that comes under income from business or profession, then these two, that is loss from house property or unabsorbed depreciation under section 32, can be carried forward even if the return of income is not filed before the due date. Okay, this is an exception they give you. A return of loss has to be filed by the assessee in his own interest, and the non-receipt of a notice from the assessing officer requiring him to file the return cannot be a valid excuse under any circumstances for non-filing of such return. So basically, even though if it's a loss, it's not necessary for the income for the assessee to file the return, but it is in his own interest that he needs to file it on time, and he cannot later say that I did not receive a notice from the assessing officer and that's why I did not file it. So if he wants to carry forward his losses, he has to file his return of loss, otherwise he can let go of it. It will not be allowed to be carried forward. Okay, please go through this, take a minute, and then we proceed. Okay, now belated return. Now see, first we saw section 139(1) where the return has to be filed before on or before the due date, that is September 30th or July 31st, as the case may be. Then we saw a return of loss under section 139(3), where if a person wants to carry forward specific losses, then he has to file the return of income within the due dates mentioned under section 139(1). Now what happens? The person missed the deadline. July 31st and September 30th, he missed it. Now, but he still wants to file the return. So there is a provision of belated returns. Any person who has not furnished a return within the time allowed to him under section 139(1), that is September 30th or July 31st, may furnish the return for any previous year at any time. Now, any time before the end of the relevant assessment year or before the completion of assessment, whichever is earlier. So let's say the previous year is 1st April 2019 to 31st March 2020. So the assessment year for that is 1st April 2020 to 31st March 2021. So in case he has missed the due date or the deadline, he can file the return of income. First one, before the end of the relevant assessment year. That means before 31st March 2021, he can file the return, or before the completion of assessment. That means before the assessing officer completes his assessment and issues the assessment order, whichever is earlier. Okay, he can file a belated return. So even if you missed your deadline, the department or the Income Tax Act 1961 allows you time to file your belated income tax return. That is before the end of the relevant assessment year Okay, please take a minute, go through this, and then we proceed. Revised return. Now, the Income Tax Act 1961 also gives you a provision to file your revised return. Okay, now revised return means, let's say you have filed your return of income within the due date, that is September 30th or 31st July, as the case may be. But later on you find out that, oh, there is a mistake that has happened and I need to revise my return. So if any person having furnished a return of income under section 139(1) or a belated return under section 139(4) discovers any omission or any wrong statement therein, he may furnish a revised return at any time before the end of the relevant assessment year, that is 31st March 2021, or before the completion of assessment. So before the assessing officer completes your assessment or before the end of the relevant assessment year, you can revise your return. So let's look at it. Let's say the previous year is okay. So the assessment year for this is okay. So now you can file the returns at any time before the end of the relevant assessment year or before the assessment is complete, whichever is earlier. All right. So these are your provisions for filing of revised returns. Please take a minute, go through this, and then we proceed. Please go through this and then we proceed. Next, let's look at an illustration, okay, to help you understand. Now, explain the brief reasons whether the return of income can be revised under section 139(5) of the Income Tax Act 1961 in the following cases. One is a belated return filed under section 139(4), a return already revised once under section 139(5), a return of loss filed under section 139(3). So the question is, in these three cases, can the return be revised under section 139(5). First one is if a belated return is filed under section 139(4), or a return already is revised once under section 139(5), or a return of loss is filed under section 139(3). Okay, so let's have a look. A solution. Any person who has furnished a return of income under section 139(1) or 139(4) can file a revised return at any time before the end of the relevant assessment year, that is 31st March 2020, or before 21, and or before the completion of assessment, whichever is earlier, if he discovers any omission or any wrong statement in the return filed earlier. Accordingly, a belated return filed under 139(4) can also be revised. Next, a return revised earlier can be revised again, as the first revised return replaces the original return. Therefore, if the assessee discovers any omission or wrong statement in such a revised return, he can furnish a second revised return within the prescribed time, that is within the end of the relevant assessment year, that is 31st March 2021, or before the completion of assessment, whichever is earlier. So it doesn't matter if he's filed one revised return already, as long as he's within the due date, that is before the end of the relevant assessment year or before the assessment is complete. If he finds out a mistake again and again, he can revise his return any number of times. Okay, and the last return, revised return that he files, that will be taken as the final one. Third one, a return of loss filed under section 139.3 is deemed to be return filed under section 139.1, and therefore that also can be revised under section 139.5. So here we see that all three, that is belated return, return already revised, and a return of loss, can be revised under section 139.5. I request you to take 2 minutes and go through this, and then we proceed. Okay, take about 2 minutes, go through this. Any questions, please ask me. Okay, now particulars to be furnished with the return. Now so far we saw the due dates, the belated returns, due date for belated returns, then the due date for revised returns, and what are the returns that can be revised and what that cannot be revised. We saw that. Okay, so far. Now let's look at the particulars to be included in the return. The prescribed form of the return shall in certain cases require the assessee to furnish the particulars of incomes which are exempt from tax, assets of the prescribed nature and value held by him as beneficial owner or otherwise in which he is a beneficiary, his bank account and credit card held by him, expenditure exceeding the prescribed limits under specific prescribed heads, such other outgoings as may be prescribed. So these particulars are to be furnished along with the return of income. Now what are these particulars? Firstly, if there is any income that is exempt from tax, like for example if he has received dividend from an Indian company, so dividend received is exempt under section 1034, but that does not mean you do not disclose that information in the income tax return. You need to disclose that information in the income tax return under the head exempt income. Okay, second one is the assets of the prescribed nature and value held by him as a beneficial owner or otherwise in which he is a beneficiary. So let's say a person is prescribed as a non-resident, okay, and there is a particular and he has income over a particular limit. In that case, he needs to disclose all the assets that he holds as the beneficiary or the beneficial owner outside a country, India, out of the country of India. So if he holds any asset as a beneficial owner or as a beneficiary outside India, he'll have to disclose all that as well. Currently, if the income of a person is more than rupees 50 lakhs after everything, then he has to disclose his assets abroad that he holds as a beneficial owner or a beneficiary. Third, in every return of income, he needs to disclose his bank account number as well as the credit cards held by him. Expenditure exceeding the prescribed limits incurred under the prescribed heads, like we saw earlier, he needs to disclose his travel expenses, electricity expenses and all other expenses under the prescribed head, and such other outgoings as may be prescribed. So such other expenses that the department may from time to time disclose, those have to be disclosed in his particulars in his return of income. Please take about 2 minutes, go through this, and then we proceed. Okay, take about a minute, go through this, and then we proceed. Next, particulars to be furnished with return of income in case of an assessee engaged in business or profession. So what you saw earlier was these incomes have to be these details have to be provided by assessees in general. Now we see the details or particulars that have to be furnished by an assessee who's been engaged in a business or profession. Okay, the prescribed form of the return in case of an assessee engaged in any business or profession shall also require him to furnish the report of any audit referred to in section 44AB. So in case the assessee carries on any business or profession which is subject to tax audit, then he has to furnish a copy of the tax audit report under section 44AB. The particulars of the location and style of the principal place where he carries on the business and all the branches thereof. The names and addresses of his partners, if any, of such other business or profession, if he is a member of an association of body of individuals. So in case a person carries on business or profession and in case he's subject to tax audit, then he has to provide a copy of the tax audit report under section 44AB. Then he also has to give the particulars, that is, where does he carry on the business and what are the other branches where he carries on business from. Third, the names and address of his partners, if any, of such business or profession. So in case he has any partners in that business or profession, then he needs to give the names and address of those partners. In case he's a proprietor, then he does not need to give any names of partners. And if he is a member of any association or body of individuals, he needs to disclose the same as well in his income tax return. Okay, then the names of the members of the association and body of individuals. So just in case he's a member of if he's a member of a body of individuals and this thing, then he has to disclose the names of the other members of the association and body of individuals, the extent of the share of the assessee and the shares of all such partners or members as the case may be in the profits of the business or profession. So if he is a member of the association or body of individuals, then he also needs to give the names and addresses of all the other members of the association or body of individuals and the extent of the share of the assessee and the shares of all such partners or members as the case may be in the profits of the business or profession. So he also needs to give what share is his in the business and what share do the other members of the association of persons or body of individuals hold in the profits of the business or profession. Okay, please go through this and then we proceed. Any questions? Please ask me. Take about a minute more, go through this. Okay, now we talk about a defective return. So we've seen revised return, belated return, original return under section 139(1). We've seen what are the particulars that need to be given into an income tax return. Now let's talk about what is a defective return. Okay, now under this section, the assessing officer has the power to call upon the assessee to rectify a defective return. Okay, so once a return is filed, in case the assessee has the assessing officer while processing the return finds that the return does not carry out or does not contain any mandatory information, then he may send back that return, or he may send a notice to the assessee in order to rectify the defective return. So let's try and understand what do you mean by a defective return. Now, where the assessing officer considers that the return of income furnished by the assessee is defective, he may intimate to the defect to the assessee and give him an opportunity to rectify the defect within a period of 15 days from the date of such intimation. The assessing officer has the discretion to extend the time period beyond 15 days on an application made by the assessee. So now, like I told you, if the income tax return filed by the assessee does not contain certain mandatory details, and if these things are coming in, all these things are being done online. So the assessing officer is processing your returns online, and you get a notice for defective return also on your email, and a link is sent onto your profile on www.incometaxindiaefiling.gov.in. You need to go there, click on it, see what the assessing officer has sent back, what are the details he wants, and then prepare another return, a rectified return, and reply to that notice online itself and submit your return again by submitting an XML file, an updated XML file. So all this has been done today to make it easy for you to file your returns. With the ease of doing business and the ease of filing returns, now you do not need to run to the income tax department to file your returns. Everything can be done sitting at home by online through the income tax website. So even a notice for defective return is sent online, and you can reply to it and file a rectified return online in response to it. Okay, so whenever the assessing officer sends back the return with a defective return notice, he gives you 15 days time to rectify the defective return. If the defect is not rectified within a period of 15 days or such other extended period, then the return will be treated as an invalid return. The consequential effect would be the same as if the assessee has failed to furnish the report. So let's say your due date of filing the return was July 31st, and you filed the return on July 25th, well within the due date. All right, but later on, when the assessing officer processed it in the month of September, October, or November, he found out certain missing things, mandatory details missing. So in that case, he sent it back to you and gave you 15 days time to rectify the defect. In case you do not rectify the defect within the said 15 days given to you by the assessing officer, your return will be treated as an invalid return, and it will be the same as you not filing your return. So what has happened? Even though you filed your return on time, you were a compliant assessee, but because you filed a defective return and did not rectify the defect within the time provided to you by the assessing officer, your return will be treated as an invalid return, and you will be treated as if you failed to furnish the return. Okay, so it's always good firstly to file your returns carefully, and next, even if there is some error made and the assessing officer sends you a defective return notice, you please need to take it seriously and get the defect rectified and submit it again. It's all about submitting a rectified XML file again. In case you're not able to do that, you need to take the help of a professional who will help you with that. Okay, but please do not be complacent about it. Where, however, the assessee rectifies the defect after the expiry of 15 days or the further extended period, but before the assessment is made, the assessing officer can condone the delay and treat the return as valid return. So let's say the defective return notice was sent to you on November 1st, and the assessing officer gave you 15 days. So by November 15th, you were supposed to respond, but you somehow failed because you fell ill, or you were busy, or you were traveling, or you this thing. So you need to explain to the assessing officer the reason for such a delay, and if the assessing officer is convinced, then he may allow you to he may treat your defective return as a valid return, provided you give him explanations and you file the necessary rectification for the defective return. Okay, please take about 2 minutes, go through this, and then we proceed. Please take about a minute more, go through this, and then we proceed. Please take about a minute more, go through this, and then we proceed. Any questions? Please ask me. Okay. We'll continue with defective return. A return of income shall be regarded as defective unless all the following conditions are fulfilled. Namely, now we'll see what are the conditions or what are the ingredients of a return that should be included in the return of income. If these are not included, then the return of income may be treated as defective. The first one, the annexures, statements, and columns in the return of income relating to computation of income chargeable under each head of income, computation of gross total income and total income have been duly filled. So all the annexures, firstly the 5 heads of income, right? I told you the 5 heads of income are income under the head salaries, then there is house property, then business, profession, then there is capital gains, and then there is other sources. So we need to individually go through each of those schedules or each of those heads of income, and whatever is applicable for us, we need to put in the details in individually those head of incomes. Okay, then when we put in all the details in the 5 heads of incomes, those add up and then we get the gross total income. So if there is some mistake in any head of income, the gross total income, there will be an error. Then the total income have been, and the computations of gross total income and total income. Then from the gross total income, like I told you, there are certain deductions that need to be made under chapter 6A. Alright, so we need to go to the various deductions that are allowable under chapter 6A and see that we have entered those details properly. In case we have not entered any of those details properly, then that will impact our total income. So either there could be an error in the gross total income because we have not entered the details in the individual heads of income properly, or there could be a mistake in the deductions so that the total income or the total taxable income will be incorrect. Okay, so we need to make sure that all the columns and all the spaces that are applicable to us under the individual heads of income need to be completely filled properly, and even the deductions need to be completely filled properly so that the gross total income and the total income are correct and there is no mistake in that. All right, then we look at B. The return of income is accompanied by the following details: a statement showing the computation of the tax payable on the basis of the return. So please remember, after you have put your income details for the various heads of income, you have put the various deduction details, and you get your gross total income and you get your total taxable income. Agreed? Okay, so far you're done. Now, after all this, you should also provide a statement that shows the computation of the tax payable. Okay, so this statement should say income under salaries, income under house property, income under business profession, income under capital gains, income from other sources. Total is gross total income. From this, the deductions under chapter 6A, deduction under section 80C, 80D, 80E, 80U are so and so. After deducting all that, you get your net taxable income or total taxable income. Then on that, you compute your total tax. and then from that total tax you reduce if you have paid any advance tax, or if there is any TDS that has been deducted, or there is any tax credit that you've received, and then the balance tax that is either payable by you or payable to you as a refund needs to be disclosed in your computation of income tax. Okay, then also the report of the audit obtained under section 44AB, that is your tax audit. If the assessee is carrying on business or profession and his business or profession is subject to a tax audit under section 44AB of the Income Tax Act 1961, then a copy of the report of the tax audit which should also be furnished. If such report has been furnished prior to furnishing the return of income, a copy of such report and the proof of furnishing the report should be attached. So along with your filing of returns, you should also furnish a report, the tax audit report. Okay. C, where regular books of accounts are maintained by the assessee, and as the return of income should be accompanied by copies of manufacturing account, trading account, profit and loss account, income and expenditure account, and any other similar account and balance sheet. So in case the assessee carries on or assessee maintains any books of accounts, then his return of income should also be accompanied or should consist of the copies of the manufacturing account, trading account, profit and loss account, income and expenditure account or similar accounts, and balance sheet. So basically the manufacturing, trading and profit and loss account or income expenditure account will contain detailed entries of the various items of income on the right side, the various items of expenses on the left side, then the profit or loss. Similarly for expenditure and income account and the trading, profit and loss account, and it will also contain your balance sheet, that is a statement of assets and liabilities as on a particular date. Okay, please take about 2 minutes, go through this, and then we proceed. Okay, any questions? Please ask me. Take about 2 minutes, go through this, and then we continue with this. Take about a minute more. Any questions? Please ask me. Take about 30 seconds more, go through this, it's important. Okay, then the first is the copies of, if a person maintains regular books of accounts, then he has to give a copy of the manufacturing, trading, profit and loss, income and expenditure account, and the balance sheet. Okay, now also if the person maintains accounts, then the personal account details will also be provided, that is the proprietary. If it's a proprietary business or profession, then the personal account of the proprietor has to be provided. If it is a firm, association of persons or body of individuals, then the personal accounts of the partners or members has to be provided. If it is partner or member of a firm, association of persons or body of individuals, partners personal account in the firm's members personal account in the association of individuals. So over here we see that if it's a proprietary business, the personal account of the proprietor has to be maintained. So simply they need to know the capital balance of the proprietor, how much of profit or loss he has added for that year, whether he's received any interest or commission. Similarly for a firm, So if the assessee is a firm, association of persons, or a body of individuals, then also we need to put in the personal accounts of the partners or members. And if it's a partner, the partner of any or partner or member of a firm, association of persons, or body of individuals is filing the returns, then we need to put details like the partner's personal account in firm, member's personal account in the association of persons or body of individuals. Where the accounts of the assessee have been audited, the return should be accompanied by copies of the audited profit and loss account and balance sheet and the audited report. So like I said, if the assessee is carrying on business or profession and it was subject to a tax audit under section 44AB of the Income Tax Act 1961, in that case, the return of income should also be accompanied by the audited profit and loss account and the balance sheet and the auditor's report. All right, please take about 2 minutes, go through this, and then we proceed. Take about a minute more, go through this. And then we proceed. Take about a minute more. Okay, now permanent account number. Now please remember, your first step towards filing your income tax return is applying for a permanent account number, also known as a PAN. So every person who wants to file his return of income, the first step is to apply for a PAN card. All right, so who are the persons who are required to apply for a PAN card? First one, every person, if his total income or the total income of any of other person in respect of which he is assessable under the Act during any previous year exceeds the maximum amount which is not chargeable to tax. So basically, if his income exceeds rupees 2,50,000, then he mandatorily needs to file or apply for a PAN card. Now, when does he need to apply for a PAN card? He needs to apply on or before 31st March or 31st May of the assessment year for which the income is assessable. So if the income of a person is rupees 4 lakhs during the previous year 1920, so he needs to apply for the PAN card before 31st May 2020 to be compliant with this provision. Okay, the second case, every person carrying on any business or profession whose total sales, turnover or gross receipts are likely to exceed 5 lakh in any thing. So in case any person is carrying on any business or profession and his total sales, receipts or gross turnover are likely to exceed rupees 5 lakhs in the previous year. So if his sales or turnover is likely to exceed rupees 5 lakhs in the year 1920 financial year or previous year, then he has to apply for a PAN card before the end of that for the previous year. That means before the end of 31st March 2020, he has to apply for a PAN card. Third, every person being a resident other than an individual which enters into a financial transaction of an amount aggregating to rupees 2,50,000 or more during a financial year. So then if it's any person, any assessee other than being a resident, other than an individual. So other than an individual, it could be an HUF, it could be a company, it could be a firm, it could be an association of persons, a body of individuals or a trust which enters into a financial transaction, that means receives or pays money exceeding rupees 2,50,000 in a financial year, then it is supposed to apply for a PAN card on or before 31st May of the immediately following financial year. That means before 31st May of financial year 2020, 31st May 2020. Okay, then every person who is a managing director, partner, trustee, author, founder, karta, chief executive officer, principal officer or office bearer of any person referred to in 4 above or such other person competent to act on behalf of such person in 4 above on or before 31st May of the immediately preceding financial year in which the person referred to in 3 enters into a financial transaction. Therefore, that means a person who is a managing director, partner, trustee, author, founder, karta, CEO, principal officer or office bearer of any person referred to in 4, that means referred to in 4 above, or any person competent to act on behalf of such person will have to apply for a PAN card on or before 31st May of the immediately following financial year. Okay, so these are the people who are permanently or who are mandatorily required to apply for a PAN card, and once you get your PAN, only then you can start filing returns for that PAN. Okay, please take about 2 minutes, go through this, and then we proceed. Okay, take about 2 minutes, go through this. Any questions, please ask. Take about a minute more, go through this, and then we proceed. Take about a minute more. Okay, the central government is empowered to specify by notification in the official gazette any class or classes of persons by whom tax is payable under the Act, or any tax or duty is payable under any law for the time being in force. Such persons are required to apply within the such time as may be mentioned in that notification to the assessing officer for allotment of a PAN. So also the central government may from time to time in its official gazette keep mentioning the class of people or the class of transactions for which you need to apply for a PAN, and such to whomever that is applicable, they need to apply for the PAN card within such time as may be mentioned in the notification. For the purpose of collecting any information which may be useful for or relevant to the purposes of the Act, the central government may notify any class or classes of persons, and such persons shall within the prescribed time apply to the assessing officer for allotment of PAN. Again, we see, for the purpose of collecting any information which may be useful or relevant for the purpose of the Act, the central government may again notify in its official gazette certain people or class of people to apply for a PAN, and those people will have to apply for the PAN within the prescribed time. The assessing officer, having regard to the nature of the transactions as may be prescribed, may also allot a PAN to any other person, whether the tax is payable by him or not, in the manner and in accordance with the procedure as may prescribed. So while processing the returns and scrutinizing the returns, if the assessing officer finds that the PAN is required for another person, even though he may be taxable or not, then the processing officer may tell him and issue a PAN for him as well. Any person other than persons mentioned in 1 or 4 above may apply to the assessing officer for the allotment of PAN, and the assessing officer shall allot a PAN to such person immediately. So other than 1 and 4, so number 2 and 3, in case any of them want a PAN, they may apply immediately to the assessing officer, and the assessing officer shall allot a PAN to such person immediately. Now we talk about PAN. Such PAN comprises of 10 alphanumeric characters, which we will see in the next screen. So take about 2 minutes, go through this, and then we proceed. Any questions? Please ask me. Take about 2 minutes, go through this. Take about a minute more. Okay. Then, like we see, PAN is comprises of 10 alphanumerical numbers. So everyone's PAN will be in the form of okay. So the first 5 ingredients of a PAN number are PAN is alphabets, the next 4 are numbers, and the last one is an alphabet again. So you can know the nature of the associate by always looking at the 4th alphabet of a PAN. In case the 4th alphabet of the PAN is P, it means personal. In case it is C, it means P means person, C means company, F means firm, T means trust, A means association of persons, and B means body of individuals. Okay, so the 4th alphabet of the PAN is important to find out the nature of the associate. All right, let's continue. The quoting of PAN is mandatory in all documents pertaining to the following prescribed transactions. So in the following transactions, the quoting of your PAN is very important and mandatory. Now, what are those transactions? In all returns to or correspondence with any income tax authority. So in case you're writing any letters to the income tax authority, or there is any revised return, defective return, or reply to their notices, you have to mention your PAN. And if you're filing any income tax return, revised return, delayed return, response to defective returns, your PAN has to be mentioned on those returns. In all challans for the payment of sum due. So in case you're paying any amount under the Income Tax Act, let it be income tax, interest, penalty, or whatever, you have to mention your PAN. Otherwise, it will not go to your respective account. Okay. Then, in all documents pertaining to such transactions entered into by him as may be prescribed by the CBDT. Also, now please note that the CBDT, Central Board of Direct Taxes, also keeps making formulations and provisions so that people do not evade money, or they do not have any black assets or black money. So there are a lot of transactions where you also need to mention your PAN number, so that the department, that is CBDT or income tax department, can track all those transactions. Let's say when you open a bank account, or let's say when you deposit money into a bank exceeding rupees 50,000 rupees, there you need to give your PAN number again. Or you're going for a foreign travel these days, so you need to give your PAN number again. Okay, so in all documents pertaining to such transactions entered into by him as may be prescribed by the CBDT in interest of revenue. However, a person is required to quote general index registration number till such time the PAN is allotted to him. So let's say you have applied for a PAN card and the application is under process. So till such time a PAN is allotted to you, you can use the general index register number which you get when you apply for a PAN number, or PAN. PAN itself means permanent account number. Okay, now we look at a minor. a minor to quote PAN of parent or guardian, where a person entering into a transaction referred to in this rule is a minor and who does not have an income chargeable to income tax. He shall quote the PAN of his father or mother or guardian as the case may be, and the document pertaining to such transaction. So in case the minor wants to enter into any transaction where the quoting of PAN is mandatory, and in case the minor is not having any income chargeable to income tax, then he can give the PAN of his father or mother or guardian as the case may be, and in the document pertaining to the said transaction. All right. Now please take 2 minutes, go through this, and then we proceed. Take about 2 minutes, go through this, and then we proceed. Take about a minute, go through this. Okay. Now, declaration by a person not having a PAN. Further, any person who does not have a PAN and who enters into any transaction specified in this rule shall make a declaration in form number 60. Let's take that a person who does not have a PAN wants to go and open a bank account. Then he shall make a declaration in form 60, given therein the particulars of such transaction either in paper form or electronically under electronic verification code in accordance with the procedures, data and structures and standards specified by the Principal Debtor General of Income Tax Systems or Director General of Income Tax Systems. If there is a change in the address or in the name or nature of business of a person on the basis of which PAN was allotted to him, he should intimate such changes to the assessing officer. Now please note, this is an important point. Let's say when you are applying for the PAN, okay, PAN card, you were staying in a city of Nagpur. Okay, so there every city has a set of assessing officers in that city. So when you apply for that, you put in your name, your address, your what is the source of income. When you're applying for a PAN card, you also get your what is the source of income, whether it's salary, business profession, capital gains or other sources, or capital gain or house property. Okay, so you need to declare all that, and then when you do that, you need to select the respective assessing officer under whose jurisdiction you come. So based on the location you have, based on the based on the first alphabet of your name, and also sometimes based on the address, the assessing officer is decided in your city. So while making an application in Nagpur, you selected the particular assessing officer who is your assessing officer, and you gave the PAN application to him, or you submitted the PAN application to him. Now after a couple of years, you left Nagpur and you went to Delhi. Okay, or you left Nagpur and you went to Pune, or you left Nagpur and you went to Bangalore. In that case, your assessing officer has to be intimated. Your assessing officer in Nagpur has to be intimated that your address has changed, and also if there is a change in the source of income, if your salary income has become income from business or profession, that nature has to be mentioned to your assessing officer. And then once you come to Bangalore, you need to also inform the assessing officer in Bangalore that I am from Nagpur and my old assessing officer was there. So what happens? Immediately your files are transferred from your old assessing officer in Nagpur to the new assessing officer in Bangalore. Okay, so it's very important for you to change, and it's also in your interest to intimate the assessing officer, because in case you have left Nagpur and you've shifted to Bangalore, then the assessing officer is not informed about it, then he will continue to send you notices at that address in Nagpur, and you might not receive it, or there might be important income tax communication that has reached your address in Nagpur, and you might not receive it, and then the department is not responsible for it because it's your fault that you have not updated your address and other details with the assessing officer. So it's very important for you to update your address, your source of income, and in case there's any change in the name, then you need to do that to the assessing officer, because based on that your assessing officer is decided. Okay, then every person who receives any document relating to any transaction cited above shall ensure that the PAN or general index number or the Aadhaar number is duly quoted on the document. So if there is any transaction, let's say your bank account opening form, if you don't have a PAN, then you enter your general index number or your Aadhaar number, and if you have a PAN, you need to enter your PAN number on that. Okay, intimation of PAN to persons deducting tax at source. Every person who receives any amount from which tax has been deducted at source shall intimate his PAN to the person responsible for deducting tax. Now, for those of you who are not versed with the TDS means tax deducted at source. There are many transactions in which the person who is paying you will deduct some amount of tax from that from the amount and pay you the remaining. Let's take for example a professional. So a professional comes under section 194J, TDS on payments made to professionals. So let's say I raise a bill on a client for 10,000 rupees. So please remember, the limit is if anyone is paid professional fees for more than 30,000 in a year, then TDS has to be deducted. So let's say I raise a bill on a client for rupees 40,000. So what the client will do, 40,000 into 10%, 4,000 rupees will be TDS, that is tax deducted at source, and he will remit the remaining 36,000 to me. Now what has happened here, I raised the bill to him for 40,000, but he deducted 4,000 and he paid me 36,000. So what about the 4,000? Now for that 4,000 to come into my account, I need to give my PAN to him. I need to share my PAN with him. That means if my PAN is ABCDE 1 2 3 4 F, I need to give him that this is my PAN. So please deposit that 4,000 rupees in my respective PAN. So what that person will do when he files his TDS returns in the quarter, he will earmark that 4,000 rupees towards my PAN, and once his return is filed, that 4,000 rupees will appear in my income tax account like prepaid taxes to the government. Okay, now how will I view it and where will I view it? There is a form called Form 26AS, which is available to you in your login on Income Tax India efiling.gov.in, or it is also available to you to be seen in your savings bank account or your current account. That is a provision which says view Form 26AS. So if any person has deducted TDS from your payments and he's filed his returns, it will appear in your Form 26AS, which can be accessed either through the income tax website or it can be accessed through your bank. Okay, but if you do not give your PAN, it's a loss of 4,000 rupees for you, because he will not be able to earmark that 4,000 rupees to your PAN. And when in the end of the year, when you file your returns, you will have to pay an additional 4,000 rupees. And if you had actually shared your PAN with him, then that 4,000 will already be appearing in your account as a prepaid tax. Are you clear? Please take about 2 minutes, go through this, and then we proceed. Take about 2 minutes, and then we proceed. Please take about a minute more, go through this, and then we proceed. Any questions? Please ask. Okay, now quoting of PAN in certain documents, where any amount has been paid after deducting tax at source, the person deducting tax shall quote the PAN of the person to whom the amount was paid in the following documents. In the statement furnished under section 192(2)(c) giving particulars of perquisites or profits in lieu of salary to an employee, in all certificates for tax deducted issued to a person to whom payment is made, in all returns made to the prescribed income tax authority under section 206, in all statements prepared and delivered or caused to be delivered in accordance. So basically, just a continuation of what I told you. If any person deducts tax on your payments and pays it to the government, then he has to quote your PAN on the returns he files to the government and on any certificate that he issues to you that this is the tax I deducted from your payments. In all these cases, he has to quote your PAN. Okay, please take a minute, go through this, and then we proceed. Go through this. Any questions, please ask. Any other observations, please feel free to discuss. Okay. Requirement to intimate PAN and quote PAN to not to apply to certain persons. So the following persons will not be required to quote their PAN or apply to PAN. Okay, the above sections of 5A and 5B shall not apply to a person who does not have any taxable income or who is not required to obtain PAN if such person furnishes a declaration under section 197A in the prescribed form and manner that a tax on his estimated total income for the previous year will be nil. So in case a person has no taxable income or he gives a declaration under section 197A that his income for that previous year will be nil, in this case the person is not required to apply for PAN. Okay, then interchangeability of PAN with Aadhaar. Every person who is required to furnish or intimate or quote his PAN may furnish or intimate or quote his Aadhaar in lieu of the PAN with effect from 1/9/2019. So from 1 September 2019, if a person does not have a PAN, he can quote his Aadhaar in place of his PAN and it will serve the same purpose. If the person has not been allotted a PAN but possesses an Aadhaar number, or has been allotted a PAN and has intimated his Aadhaar number to the prescribed authority. Okay, so in either case, whether he does not have a PAN, then he can give his Aadhaar number, or he has a PAN but he chooses to give his Aadhaar number to the prescribed authority, even then it will be allowed. A PAN would be allotted in the prescribed manner to a person who has not been allotted a PAN but who possesses an Aadhaar. So just in case the government gets to know that this person does not have a PAN but has been allotted an Aadhaar, then the government will automatically issue a PAN number for him. Okay, so please take about 2 minutes, go through this, and then we proceed. Please take about a minute more. Please go through this. Take about a minute more. Any questions, please ask me. Okay, quoting and authentication of Aadhaar number. Every person entering into such prescribed transactions is required to quote his PAN or Aadhaar number, as the case may be, in the documents pertaining to such transactions, and also authenticate such PAN or Aadhaar in the prescribed manner. So, which are the transactions or documents that are notified by the income tax authority that require the PAN and the Aadhaar of the assessee to be quoted? The assessee is required to quote his PAN and Aadhaar in those documents or transactions, and also authenticate such PAN or Aadhaar in the prescribed manner. It could be through the medium of an OTP or any other manner as may be prescribed. Okay, every person receiving such document relating to transaction referred to in 1 has to ensure that PAN or Aadhaar number has been duly quoted in such documents, and also ensure that such PAN or Aadhaar is also authenticated. So, for example, bank employee is receiving an application for opening a bank account. So in that case, when an application has been submitted, it is his duty to see that the applicant's PAN number and Aadhaar number is mentioned in that application, and it has also been authenticated. Okay, the power to make rules. The CBDT is empowered to make rules with regard to the following. CBDT means Central Board of Direct Taxes. The form and manner in which the application for PAN may be made and the particulars to be given therein. The categories of transactions in relations to which PAN or the general index numbers of the Aadhaar number, as the case may be, is required to be quoted. So the CBDT has the power to always keep specifying and making changes in the application for PAN, in the application in which the PAN has to be made and the particulars given thereunder, and the categories of transactions in relation to which PAN or general index number has to be quoted. So from time and time again, the CBDT might keep making additions or modifications in the application form for applying for a PAN, or the list of transactions where a PAN or Aadhaar number is mandatorily required to be quoted. Okay, please take about 2 minutes, go through this, and then we proceed. Take about 2 minutes, go through this. Okay, let's continue with the powers of the CBDT to make rules. The third power of the CBDT is the categories of documents pertaining to business or profession in which the PAN or general index number register or the Aadhaar number, as the case may be, shall be quoted by other person. So the CBDT may always make modifications or additions to the list of documents pertaining to business or profession where the PAN or the general index number or the Aadhaar, as the case may be, shall be quoted by every person. So the CBDT also has that power. The class or classes of person to whom the provisions of this section shall apply. So the CBDT also can modify and determine the class or class of persons to whom this section shall apply. That means the applying for PAN and Aadhaar, and also quoting of PAN and Aadhaar in various documents. The form and the manner in which a person who has not been allotted a PAN or general index register number shall make a declaration. So for people who do not have a PAN or a general index register number, shall also have to fill a form and give details as to why they have not applied for it and what are the details of their transactions, their name, their address, and other things. So the CBDT has the power to prescribe the form and manner in which a person who has not been allotted a PAN or a general index register number to make a declaration. The CBDT has the power to determine the manner in which the PAN or general index number or Aadhaar number, as the case may be, shall be quoted in transactions in B above. Okay, the manner in which it has to be quoted, the CBDT also has power to determine that. The time and manner in which such transactions shall be intimated to the prescribed authority. The CBDT has powers to determine not only the documents or transactions in which the PAN or Aadhaar or general index register number is to be quoted, but it also has the power to determine the time and manner in which such transactions shall be intimated to the prescribed authority. Please take a couple of minutes, go through this, and then we proceed. Please take a minute more. Any questions, please ask me. Take about a minute more. Okay, now meaning of certain terms. Aadhaar number, an identification number, is issued to an individual by an authority on receipt of demographic information and biometric information. So an Aadhaar number is a number issued by a specific authority based on the receipt of demographic information and biometric information. Biometric means your fingerprints, your eye scan and all these, and also a demographic means your name, address, age and location and everything. Based on that, a number called the Aadhaar number is issued to you. Then what is authentication? The process by which the PAN or Aadhaar number along with demographic information or biometric information of an individual is submitted to the income tax authority or such other prescribed authority or agency for its verification, and such authority or agency verifies the correctness. So once you have a Aadhaar number, you these days, using the mobile number that you have in your Aadhaar number, you get an OTP and you can authenticate your Aadhaar number. Okay, then the general index register number. General index, the number given by the assessing officer to an assessee in the general index register maintained by him and containing the designation and particulars of the ward or circle in the range of assessing officer. So like I told you, whenever a person makes an application for a PAN card, he has to choose the assessing officer under whose jurisdiction he falls. So the assessing officer maintains a general index register of all the people who fall under their jurisdiction and who have applied for the PAN. So then that number is given as the general index register number. Please take about a minute, go through this, and then we proceed. Take about a minute more. Okay, now the quoting of the Aadhaar number. Now we are done with discussions on the PAN. Now let's look at the Aadhaar number. Okay, the mandatory quoting of Aadhaar number. Every person who is eligible to obtain an Aadhaar number is required to mandatorily quote Aadhaar number on or after 1st July 2017 on an application form for allotment of permanent account number in the return of income. So any person who is eligible to obtain an Aadhaar number is mandatorily required to quote the Aadhaar number on any application for allotment of PAN made after 1st July 2017 and also in every return of income filed after 1st July 2017. Mandatory quoting of enrollment ID where person does not have an Aadhaar. If a person does not have an Aadhaar number, he is required to quote enrollment ID of the Aadhaar application form issued to him at the time of enrollment in the application form of allotment of permanent account number or the return of income furnished by him. So let's say a person has made an application for a Aadhaar but he's not received the Aadhaar number, then there will be an enrollment ID that will be provided to him when he submits his form. That enrollment ID has to be provided by him and whenever he applies for a PAN or files his return of income after 1st July 2017. Enrollment ID means a 28-digit enrollment identification number issued to a resident at the time of enrollment. Okay, so please take about 2 minutes, go through this, and then we proceed. Take about 2 minutes, go through this. Take about a minute more. Okay, intimation of Aadhaar number to prescribed authority. Every person who has been allotted a permanent account number as on July 1st, 2017 and who is eligible to obtain an Aadhaar number shall intimate his Aadhaar number to the prescribed authority on or before the date as may be notified by the central government. Accordingly, the central government has by notification 31/2019 dated 31/3/2019 notified that every person who has been allotted a permanent account number as on 1st July 2017 and who is eligible to obtain an Aadhaar number shall intimate his Aadhaar number to the principal DGIT systems or principal director of income tax systems by 30th September. So see, please note that the government is trying to link your Aadhaar and PAN so that all the information of your PAN and Aadhaar can be obtained by entering either of the numbers. So any person who has a PAN, okay, and who's eligible to get an Aadhaar number as on 1st July 2017 shall intimate his Aadhaar number as soon as he gets it to the prescribed authority. So for this, since the last 2-3 years of 1st July 2017 onwards, whenever an income tax return is filed, it is mandatory to enter the Aadhaar number or link the Aadhaar number of the SSC. In case that was not done, then the income tax return was not accepted. So these are ways and means in which the government is trying to link your PAN and Aadhaar. It is for a good cause, so that all the information is readily available, and you can also access the information whenever you want. Consequences of failure to intimate Aadhaar number. If a person fails to intimate the Aadhaar number, the permanent account number allotted to such person shall be made inoperative after the date so thing. So it simply means the government will decide on a date, and if after that date you do not intimate your Aadhaar number connected to that PAN number to the government, your PAN number will be blocked. So if your PAN number is blocked, there are a lot of transactions that you will not be able to carry out. Okay, like your banking transactions, financial transactions, purchase of properties, and filing of income tax returns. So you will be considered a defaulter in all those. Okay, provisions not to apply in certain cases. The provisions of section 139AA relating to quoting of Aadhaar number would however not apply to such persons or classes of persons or any state or part of the state as may be notified by the central government. So just like the central government issues a notification and says that to whom the provision is applicable, the CBDT or central government can also issue notifications and say who this section or provision is not applicable to. That means the provision of Aadhaar and PAN. All right, now please take about 2 minutes and then we proceed. Please take about 2 minutes and then we proceed. Take about a minute more. Any questions, please ask me. Okay, scheme for submission of returns to tax return preparers. This was a scheme which came up quite a few years back, where the government authorized certain people to act as tax return preparers and help people to prepare the income tax returns and submit the income tax returns. So let's read more about the scheme for submission of returns to tax return preparers. In this section provides that for the purpose of enabling any specified class or classes of persons to prepare and furnish the returns of income, the Central Board of Direct Taxes may notify a scheme to provide that such persons may furnish their returns of income through a tax return preparer authorized to act as such under the scheme. So the government brought out a scheme, I think this was in the year 2007, if I'm not mistaken, 2006 or 2007, and where it brought in a scheme of tax return preparers where all over the country examinations were conducted and people were selected to act as tax return preparers to reach out to people who are unable to prepare and submit their income tax returns at a very affordable cost. Okay, so this was known as the tax return preparer scheme, TRPS, if I'm not mistaken. Yes. The tax return preparer shall assist all the persons furnishing the return in a manner that will be specified in the scheme, and also fix his signature on such return. All right, so the main duty of the tax return preparer was to assist the persons in preparing of their income tax returns, the people who cannot prepare their income tax return in a manner that will be specified in the scheme, and also affix his signature on such return. That means take responsibility for the same. That means that tax return preparer, or TRP as they are called, has prepared the return. The tax return preparer means any individual other than an officer of a scheduled bank with which the assessee maintains a current account or has a regular dealings, a legal practitioner who is entitled to practice in any civil court in India, a chartered accountant, an employee of the specified class or classes of persons. So these are the people who cannot be a TRP, that is any officer of a scheduled bank, okay, with which the associate has maintained a current account or has regular dealings. Point number one, a legal practitioner who is entitled to practice in any civil court in India, a chartered accountant, an employee of the specified classes or classes of persons. So these are the people who cannot be a TRP. Other than this, people can become a TRP. So please take about 2 minutes, go through this, and then we proceed. Any questions? Please ask me. Okay, now this is, let's look at an illustration. Mrs. Hetal, an individual engaged in the business of beauty parlor, has got her books of accounts for the financial year ended 31st March 2020 audited under section 44AB. Her total income for the assessment year 2021 is rupees 3,35,000. She wants to furnish a return of income for the assessment year 2020-21 to a tax return preparer. Can she do so? So Mrs. Hetal is a person who's engaged in the business of beauty parlor. She gets her books of accounts audited under section 44AB. That means a tax audit is done. Her total income for the assessment year is rupees 3,35,000. She wants to furnish her return of income for the assessment year 2021 through a tax return preparer. Can she do so? Let's look at the solution. Section 139B provides a scheme for submission of return of income for any assessment year through a TRP, that is tax return preparer. However, it is not applicable to persons whose books of accounts are required to be audited under section 44AB. Therefore, Mrs. Hetal cannot furnish a return of income for assessment year 2021 through a tax return preparer, because tax return preparers cannot file the returns of people who are supposed to get their books of accounts audited under a section 44AB. So in this case, Mrs. Hetal cannot use the services of the tax return preparer. All right, so please take about a minute, go through this, and then we proceed. Please take a minute or two, go through this, and then we proceed. Any questions? Please ask me. Okay, now the power of CBDT to dispense with furnishing of documents, etc., with the return and the filing of return in electronic form. Now let's again continue to discuss the powers of the CBDT. Section 139C provides that the Central Board of Direct Taxes may make rules providing for a class or classes of persons who may not be required to furnish documents, statements, receipts, certificates, reports of audit, or any other documents which are otherwise required to be furnished along with the return under any provisions of the Act. So basically the CBDT has the power to dispense of the furnishing of any documents, statements, receipts, certificate, reports, or anything which otherwise the assessee is required to submit. So the CBDT might say, okay, no problem, to you it is not applicable. However, on demand, The said documents, statements, receipts, certificate, reports, or anything have to be produced before the assessing officer. So let's say the CBDT says no need to submit these documents when you file your returns, but later on when the assessing officer is processing your IT returns, he may ask for these documents, statements, receipts, certificate, reports, and then it has to be produced by the assessing officer. Then the assessing section 139D empowers the CBDT to make rules providing for the class or classes of persons who shall be required to furnish the return of income in electronic form, the form and the manner in which the return of income in electronic form may be furnished. So the CBDT has the power to time and time again tell you that what are the persons or the class of persons that are required to submit their form, return of income in an electronic form, and when they are electronic form, and when they are submitting the returns in the electronic form, in what format they have to be submitted. That also can be specified by the CBDT. Please take 2 minutes, go through this, and then we proceed. Please take about a minute more, go through this, and then we proceed. Any questions? Please ask me. Okay, then further the CBDT has the powers also to specify the documents, statements, receipts, certificates, or audit reports which may not be furnished along with the return of income in the electronic form but has to be produced before the assessing officer. On demand, we have already discussed this. The computer resource or the electronic record to which the return of income in electronic form may be transmitted. So the CBDT can also determine this as to through what channel will the electronic form of the return be transmitted. All right. Let's proceed, and okay, let's move on to the next topic of self-assessment. Now, self-assessment means payment of tax, interest and fee before furnishing return of income. So like the name goes, self-assessment means the assessee has to assess himself based on his own calculations, computations, that what is the tax he needs to pay, okay, before furnishing his return of income. Where any tax is payable on the basis of any return required to be furnished under section 139 after taking into account, first one, the amount of tax already paid under the provisions of the Income Tax Act, the tax deducted at source or collected at source, any relief claimed under section 89, any other tax credit. So whenever an assessee is about to file his returns, firstly he needs to put all his returns of income under the 5 heads of income to get the gross total income. From that he claims deductions under chapter 6A. Then he comes to his net taxable income. From that taxable income he deducts any taxes that he's already paid in the form of advance taxes. So as per the Income Tax Act 1961, an assessee is required, or certain classes of assessees are required to pay advance taxes at regular intervals. So that will be reduced from his tax liability. If anyone has deducted tax at source or collected tax at source from the assessee while making a payment for him and filed the TDS returns, then that amount also has to be deducted from his tax liability. In case the assessee has claimed any relief under section 89, okay, then that relief also can be claimed under from as reduced from his tax liability. And in case there is any other tax credit to set off in accordance with the provisions of section 115 JD, then that can also be reduced from his income tax liability. So after he reduces all these income tax liability, if he has still to pay any tax according to his own calculations and declarations, he will have to pay that tax as a self-assessment tax and file his returns. So that will be a self-assessment, like the name says. Then the order of adjustment of amount paid by the assessee. So at the end of this whole exercise, what we saw on top, when the assessee pays any amount, what is the order of adjusting that amount? The order is as follows. Where the amount paid by the assessee under section 140A1 falls short of the aggregate of the tax interest and fee as aforesaid. The amount so paid shall be first adjusted towards the fee, that is the late fee, and thereafter towards the interest, and the balance, if any, shall be adjusted towards the tax payable. So let's say the employee did all this exercise, or the assessee did all this exercise, and the tax payable came to rupees 10,000. But instead of 10,000, he paid only rupees 8,000. Okay, so when he did all the exercise, the tax payable was 10,000. The late fee was 1,000 and the interest was 500. So totally he had to pay 11,500. But he had only 8,000 or 9,000 in his bank. So he paid 9,000. So how will the 9,000 be applied in the payment is the question. So out of the 9,000, first 500 will be applied to the interest. Then the 1,000 will be applied to the late fee. And then the remaining 7,500 will be applied to the tax payable of 10,000. This is how the amount will be adjusted by the department. All right, please take 2 minutes, go through this, and then we proceed. Take a minute more and then we proceed. Okay, now then there is interest payable under section 234A. For the above purpose, interest payable under section 234A shall be computed on the amount of tax on the total income as declared in the return as reduced by. So when an assessee files his return and he says some tax is payable by me, that tax will be reduced by any advance tax and any tax deducted at source, and also any relief claimed under section 89 and any other tax adjustment. Then whatever is the balancing amount, interest under section 234A at 1% per month on a simple interest will be calculated for late filing of returns. Interest, then there is also interest under section 234B. Now what is the interest under section 234B? Interest under section 234B shall be computed on the assessed tax or on the amount by which the advance tax falls short of the assessed tax. So like I told you, every assessee is required to pay advance tax to the government on certain dates. So in case the advance tax is not paid on the specified dates, or the assessed advance tax is less than the final computed tax, then he will have to pay interest on that also under section 234B. Then consequence of failure to pay tax, interest or fee, if any assessee fails to pay the whole or any part of tax or interest or fee, he shall be deemed to be an assessee in default in respect of such tax or interest or fee remaining unpaid, and all the provisions of this act shall apply accordingly. So in case he fails to pay either tax, the interest or the late fee, any amount, then he will be treated as an assessee in default, and all the provisions for recovery of tax from such a person will be applicable in that case. Please take a minute, go through this, and then we proceed. Okay, now with this we are done with the topic of provisions of filing of returns of income and this thing. So under Income Tax Act, I hope you found it useful. Before I end my session, I would like to again welcome you to crack CA exams with us, which is a vertical of Unacademy, which provides you top educators, quality content, and overall a great learning experience. So to help you in your preparation for the CA Foundation and the intermediate examination. So come, let's crack CA exams with Unacademy, India's largest online learning platform. Now, like I told you in the beginning, that the Unacademy has provides sessions on 3 platforms. One is YouTube, what you're currently watching. Then there are special classes, which is present on the Unacademy Learning app, and then there is the Plus platform, which is a payment-based subscription model, and it is one of the most important and advanced platform of Unacademy, which helps you in accelerating and enhancing your preparation for the CA Foundation and Intermediate course. Now, how does it do that? Let's look at that. The Plus platform of Unacademy provides you daily live classes where you get to chat with your educator, engage in discussions, Ask your doubts and answer polls, all this while the class is going on. Not at the end of the class, not on another day, but while the class is going on. Secondly, the Plus platform of Unacademy conducts live tests and quizzes on regular intervals to help you evaluate your preparation. And they also conduct mock tests and quizzes at periodic intervals to get detailed analysis of your performance. Now, what happens when they get a detailed analysis of your performance? They help you identify your weak areas, your strong areas, your not so strong areas, so that you can spend more time on your weak areas, a little lesser time on your not so strong areas, and less time on your strong areas, thereby resulting in minimization of time wastage and maximum utility of time. The third reason why the Plus platform of Unacademy is suggested to you and you are encouraged to be a part of it is the courses provided by the Unacademy Plus platform are structured. They are structured because they are in line with your exam syllabus to help you best prepare for it. So once you clear a Plus course, you can rest assured that you've completed the syllabus of your examination without missing out on any important or major points. And lastly and most importantly, the one subscription to the Plus platform gives you unlimited access to all the live and recorded courses to watch from the comfort of your devices. That means you can watch it from your mobile, tablet, laptop or desktop at any place you want, anytime you want. There is no restriction. I think this is one of the most important features of the Plus platform of Unacademy. So I encourage you and request you to get on board the Plus platform of Unacademy in order to enhance and accelerate your preparation for the CA Foundation and the intermediate examination. Now, like I told you, the special classes and the Plus platform is available to you on the Unacademy Learning app. Now, for those of you who have downloaded the Unacademy Learning app and are using it, I thank you very much. And for those of you who have not yet using it, I request you to go on to the Play Store of your phone and download the Unacademy Learning app. Enter your mobile number. You will get an OTP, and using that OTP, you need to register on this app. So what happens once you register on the Unacademy Learning app? It opens your world to all the special classes and Plus courses that Unacademy has to offer you to help you in your preparation for the CA Foundation and Intermediate course. Please remember, the special classes are absolutely free of cost, and it contains some very important and interesting sessions which will help you in your preparation for the CA Foundation and Intermediate course. I myself have taken numerous special classes on the Unacademy Learning app platform. And the Plus platform, like I said, is a payment-based subscription model which will help you enhance and accelerate your preparation for the CA Foundation and intermediate examination. So if you have not yet downloaded the Unacademy Learning app, I request you to download it and make the most of it if you have not done so already. So like I was telling you, the Plus platform is a payment-based subscription model. The various packages for the CA Foundation and Intermediate subscription under the Plus platform of the Unacademy are as follows. The packages are for 1 month, 3 months, 6 months, 12 months and 24 months. While choosing your package, please do not forget to use the code Prathik to get a discount of 10% on the listed price. I repeat, PRATHIK, to get a discount of 10% on the listed price. So the after discount price, so the normal price of the packages are 3,500 for 1 month, 8,750 for 3 months, 14,000 for 6 months, 17,000 for 12 months, and 21,000 for 24 months. But once you use my code, that is Prathik, PRATHIK, you get a discount of 10% on the listed price. So the after discount cost of each package is, the 1 month will cost you rupees 3,150, the 3 month will cost you rupees 7,875, the 6 month will cost you rupees 12,600, the 12 months will cost you rupees 15,750, and the 24 months will cost you rupees 18,900. You see, immediately you get a discount or a savings of 10% after you use my code Prathik, PRATHIK. I personally would suggest you to go for the 12 months or 24 months for two reasons. Firstly, it is cost effective. If you see the per month cost of the 12 months and 24 months, it is way less than the 1 month or 3 month packaging cost. Secondly, as the foundation course and the intermediate course is provided to you in one subscription, it makes sense for you to go for the 12-month package, because it normally takes about a year's time or 12 months time for you to prepare and clear the CA Foundation and the intermediate examination. So if you're getting that a package for that duration at a very good price, I think it makes sense for you to go for the 12 months. But please do not forget to use my code Prathik to get a discount of 10% on the listed price. Moving further, like I told you, the special classes are, a lot of special classes are there on the Unacademy Learning app, and here are a few screenshots of the many special classes that I have conducted there. for various, the foundation and the intermediate course. I have taken sessions on the revision test papers issued by the Institute of Chartered Accountants of India, the Sale of Goods Act, the Indian Contracts Act, the Companies Act. So there are a lot of sessions that I've taken, and I'm just naming a few of them over here. So you can go on to the Unacademy Learning app, go to my profile, Prathik Gupta, Prathik, and enjoy and benefit from the various special classes that I have taken there. Okay, and for your benefit, I'm also giving you links of a few of the sessions that I've taken, special classes that I've taken on the Unacademy Learning app. So either you can click on the link or copy and paste them in your browser. That will take you to the Unacademy Learning app and take you directly to my special class. So please do not also forget to follow my profile in order to get real-time updates about the timings and topics of my session. So I have taken special class on the Indian Contracts Act, the special class on the Sale of Goods Act, special class on the Indian Partnership Act, special class on the LLP Act, special class on Companies Act, and special class on various revision test papers issued by the Institute of Chartered Accountants of India. I hope you benefit from this and make the most of it. In case you have any questions or any discussions, please feel free to get in touch with me. Okay, so with this, I would like to end today's session on the Income Tax Act, a provision of the Income Tax Act, and come, let's crack CA exams with Unacademy, India's largest online learning platform. And I thank you very much for being a patient listener today. And I hope to see you more in my next sessions. My next YouTube session will be at 9 p.m. today on the Negotiable Instruments Act Part 2. All right, so thank you and see you there.